What if the future of your finances wasn't just about spreadsheets and market charts, but about finding the perfect partner for your money? The world of investing has evolved dramatically, presenting us with two distinct paths: the sleek, algorithm-driven efficiency of a robo-advisor and the nuanced, personalized guidance of a human financial advisor. Both promise to help you grow your wealth, but which one is truly right for you? Today, we're diving deep into this modern financial dilemma, specifically looking at how Ally's offerings stack up in this dynamic landscape. For years, the image of a financial advisor was pretty clear: a seasoned professional in a crisp suit, sitting across from you in a mahogany-paneled office, discussing your life goals and poring over market reports. This traditional model, built on personal relationships and bespoke advice, has served countless investors. But then, technology, as it always does, disrupted the status quo. Enter the robo-advisor, a digital platform designed to automate investment decisions, manage portfolios, and offer financial guidance with minimal human intervention. It promised lower costs, accessibility, and a hands-off approach, shaking up the entire industry. Ally, a well-known name in the digital banking space, has positioned itself uniquely by offering both a robust robo-advisor service and a more traditional human advisory option. This puts them in a prime spot to illustrate the strengths and weaknesses of each approach. It's not about declaring one universally superior, it's about understanding which model aligns best with your financial journey, your comfort level, and your aspirations. Let's start by unpacking the allure of the robo-advisor, particularly Ally's robo-portfolios. The immediate draw for many is the cost. With Ally, for their cash-enhanced portfolio, you pay zero advisory fees. Yes, zero. This is a significant departure from traditional models where fees can eat into your returns over time. Even their market-focused portfolio, which invests more directly in the market, comes with a highly competitive 0.3% annual advisory fee. Compare that to the typical 1% or more that human advisors might charge on assets under management, and the savings quickly become apparent. Beyond the cost, robo-advisors offer unparalleled accessibility and a low barrier to entry. With Ally, you can open a robo-portfolio with a minimum investment of just $100. This democratizes investing, making it achievable for individuals who might not have the substantial lump sum often required by traditional advisors. The process is streamlined and digital. You answer a series of questions about your financial goals, risk tolerance, and timeline, and Ally's algorithms then construct a diversified portfolio for you, primarily using low-cost exchange-traded funds, or ETFs. Think of it as a set-it-and-forget-it solution. The robo-advisor automatically rebalances your portfolio to maintain your desired asset allocation, ensuring it stays aligned with your risk profile. This automatic rebalancing is a huge advantage, as market fluctuations can easily throw a manually managed portfolio off course, requiring constant attention. For those who are new to investing, or simply prefer a hands-off approach due to time constraints or a lack of personal interest in market analysis, a robo-advisor like Ally's can be incredibly empowering. It takes the guesswork and emotional decision-making out of investing. You're less likely to panic sell during a market downturn or chase hot stocks, as the algorithm sticks to its predetermined strategy. However, the very automation that makes robo-advisors appealing can also be their limitation. The lack of a human touch can be a significant drawback for some. While Ally's robo-portfolios are overseen by human financial professionals, the day-to-day interaction and personalized guidance are minimal. This means if you have complex financial needs that extend beyond basic investment management, things like intricate estate planning, navigating significant life events like a divorce or a large inheritance, or optimizing highly specific tax situations, a robo-advisor might fall short. They operate on a rule-based system, and while sophisticated, they can't fully grasp the nuances of your unique personal circumstances or offer the same level of empathetic support. Imagine a sudden economic crisis. While a robo-advisor will continue to execute its pre-programmed rebalancing, a human advisor can offer psychological reassurance, explain the broader market context, and help you resist the urge to make impulsive, emotionally driven decisions. This behavioral coaching can be invaluable, especially during periods of high volatility. The algorithm won't call you to talk you off the ledge when the market dips 20%. This brings us to Ally's other offering, Ally Invest Personal Advice. This is where the human element comes strongly into play. Unlike the robo-advisor, personal advice is designed for those seeking a more comprehensive and personalized financial planning experience. The trade-off, as you might expect, is the cost and the minimum investment. To access Ally's personal advice, you'll need a minimum of $100,000 in investable assets, and the blended annual advisory fee ranges from 0.75% to 0.85% of your assets under care. So, what do you get for that higher fee and larger investment? A dedicated financial advisor. This is a real person who will work with you one-on-one. They will delve deep into your entire financial picture, not just your investment portfolio. This includes areas like retirement planning, college savings, budgeting, debt management, and even more complex tax strategies. They can help you create a holistic financial plan that adapts as your life changes. With that said, thanks for watching, and until next time.